The trajectory of the dollar is quite weak. People have been quite surprised by this movement, but I will say that's the objective of the new Trump administration. Europe was out of favor for decades. Now it's becoming in the favor. And that's why also a weak dollar has an impact also on gold. And I really insist on this term. There is clearly a debasement. It's a question of fiscal discipline. You don't want to be dependent of one country or another country.
Are we witnessing a paradigm shift? Hi, you are watching Merill Talks, and Mark. Yields are rising. What are the implications?
Mike, the US Treasury, especially the 10 and the 30 years, has been an issue because rising at the level haven't reached since 2007. So I can see, I think for the audience, it's good to see probably on the screen. So we get the 10 years here on your screen. And now we get the 30 years on the screen. And you see, clearly here, it's an issue. Why? Because the Trump administration, one of the objectives of the Trump administration is to put the rate down. As we know, and we discussed several times on our previous videos, that Donald Trump has an issue with Jerome Powell because he's pushing him to cut the rate. And as we know, Donald Trump is coming from the real estate side. And for real estate, interest rate at a high level, it's not a good thing. So clearly here, the problem is the auctions. The US auctions was not really fantastic. And I think in US, people start to be quite worried because the investors, I'm talking about the global investors, and I will go more into with especially in Asians investors here who are looking for higher yield to invest in US. As we know, US has a problem of fiscal. The first implementations of the Trump administrations was clearly here. They want to cut the rate, that's for sure. The problem is we are going on the other side. And I think Scott Bessent, the US Treasury Secretary, ex-fund manager, I think he did a good job on the negotiation side with several countries, as we know, but also on the currency. The trajectory of the dollar is quite weak. I think it's good also for the audience to see on the screen the trajectory of the first things we will see, the euro dollar, and the second one, the dollar yen here. The first one, the euro dollar, it's very important to see why, because we can imagine that the economy in Europe is in a better shape, but it's probably not the case, I will say, from a structural perspective. And we made a lot of video on that side, and our view are quite clear. We have issue with the core of Europe. I'm talking about here Germany and France, when the other one, which is Spain, Portugal, and on the other side of the spectrum, Poland, are the fast-growing economies here in Europe. But the point is, you have a very weak dollar, which is something well because Trump administrations want to bring to export. They want to industrialize again US. That's the number one objective. But they are facing an issue. The Fed is still a counterpower facing the Donald Trump administrations. And high rate, it's not the best things because it has an impact, obviously, also for the consumer. The US consumer is nil to face high, the mortgage are quite high, etc., etc. So I think the problem here is simply that first, the rate are high in US. The investors are looking for higher yield. And in the other side, in Europe, also the rate has been going up. And especially since the story, the German government approved this mega budget, this, I will say, fiscal stimulus to remilitarize Germany.
And so do you think the relationship between monetary policy and the exchange rate has weakened, whereas before we had the exchange rate being completely dependent, basically, on interest rates? Do you think now they're kind of doing their own two things?
Yes, Mike, it's a very valid question you said, because normally if interest rates are quite high, the currency should be high. That's the thing. Now, we know also by experience that in the emerging market world, often we are facing interest rate quite high, but currency quite low, which is quite intriguing because the dollar is at these junctions, I will say. And it's something very different because the dollar is the dominant currency here. So, lot of people have been quite surprised by this movement, but I will say that's the objective of the new Trump administrations. Now, what they want, side by side, they want the rates going down and they want also the currency to is going down. The problem they are facing a problem of fiscal issue on the debt side. They need to finance. That's why Trump already was cutting the military was also the famous dodge with Elon Musk to cut and find everywhere we can find to reduce the cost of, I will say, the social security. So clearly here, the rate is an issue. Why it's an issue? Because this impact of the rate has a repercussions on the rest of the world. Um, and this creating a problem because, for example, if you are a corporate based in Europe, the ECB at the moment it's cutting the rate. But the impact of US, you have to finance yourself on the market with a higher rate. And I'm talking this base if you are euro denominating debt. That's the point.
Mark, how is the US credit rating impacting even everyday Americans at this point?
Yes, I mean the recent downgrade of Moody's has an impact. I mean it's not a surprise because clearly if you see, and I think just for our audience to see the trajectory of the debt to GDP, which is a very good indicator to feel how's the things going. We have been discussing this part, like I say, several times here on Merill Macro Talk. You can see like US, it's projecting on the high side when, for example, as we know, Germany was on the lower side. But it's an issue for the investors to see so much money and so much deficit. I mean, US has this advantage that a lot of people for many years have been injecting money. So I would say US has a lot of borrower, I will say. The debt, it's like you are facing an economy is in decelerations, that's for sure. You are in heavy debt. And the problem is if you're not cutting the rate, and that's why Donald Trump is the advocate and is fighting with Jerome Powell to cut the rate to inject liquidity. The problem is at the moment, and especially the predictions of the number of rate cut, it's quite low compared to what we can imagine at the beginning of this year. So clearly, here the major question it's a question of fiscal discipline. What can I mean here in Europe we cannot speak about fiscal discipline because we used to have the Maastricht Treaty was get very strict approach on that side and we are not using it anymore. And the one who has been for many years and I would say even more decades the advocate to respect is Germany. And now there's going on the other side of the spectrum. So clearly also in US we are facing the same issue. Where's the fiscal discipline? And a lot of people are panicking. And like I said, Jimmy Dimon, Ray Dalio has been quite vocal to see that. And I think a lot of it has a direct impact for us as not investor but also as a consumer because the rates are too high and how long it will stay too high. So that's the question here.
So, Mark, why is the dollar weakening and how is it affecting the euro and the European region?
I will say the euro is going up, which could be an issue for Europe, clearly, because we are, especially, I will say, in the South Zone, a strong euro, it's not recommended, especially if for the tourists. I mean, we are noticing here in Malta the wave of tourists is still quite high, but if the euro continue to be so high, it could be an issue really in the medium and long term here, because especially for economy, even for an economy like exporting economy like Germany, I mean, that's an issue, as we know. Germany is already struggling with its industrializations. The automobile sector is in crisis, for sure. So, high euro, it's clearly an issue here, and especially when it's pushing by default. So it's not like the economy is like ready, the economy is in good shape, so the euro is good. It's just by default. There is no other thing. And that's why also a weak dollar has an impact also on gold. And the uncertainty based on the tariff, etc., is also pushing gold. Because people used to have dollar as a, like I say, like a dominant, as a benchmark, as a dominant currency. And now they ask for escape where they should put their money. If it's not in a dollar, so is it the euro? Is it the gold? Or is it could be also the crypto? That's why also we see also this trend. There is like a debasement here. And I really insist on this term. There is like a clearly a debasement of that. US used to be a dominant player. And for the past 30 years, US was a dominant player not only as a number one economy, but also from a stock market perspective. If you have been investing in the S&P 500 or the Nasdaq, is mainly outperforming compared to the other economy far away. The earning have been quite fast in US compared to the rest of the world. So they've been dominant, and this is a big question. Even the American, especially I will say, pension fund endowments in US, they're asking themselves and that's why there is such a big move of flow of money coming from US to Europe, especially on the Euro Stock 50. And they continue to think because normally the normal thesis for this kind of investors, let's say institutional investors, it's like a percentage of US asset and after they allocate to the rest of the world. But for them, it was a fantastic year because they inject money in Europe. So the euro was going up. The stock market was outperforming the US stock market. Or again, it is a change of paradigm here. That what the last 30 years will change, that the investor will say, no, anymore, I'm not putting any more US money on the US assets. It could be treasuries or it could be also stocks. And asking, yes, it's maybe better to invest in Europe. That's clearly questions at the moment. Now, we don't have enough time span to discuss about this, but this last half year, I've been changing the mindset of a lot of investors and thinking, okay, maybe Europe is the recipient.
Mark,
Mhm.
who is financing the rising debt in the US? Is that changing? Is the investor base changing?
Yes, I mean, the point is, as we know, the Japanese have been like really one of the number one financing the US Treasuries. It was normal because at home the rate was even a negative. Now the things are changing. But the other interesting one are Chinese. Chinese, the currency is not fully floating. So they have a mechanism. They need to have some US Treasuries. So at the moment, there is a lot of tensions between the Trump administration, Xi Jinping, and they try to challenge, they try to impose tariff. But nevertheless, for the moment, the way the mechanisms the Chinese economy is doing and the things, the Chinese economy, if they want to export, they need dollars. So they need US Treasury to back it up as a collateral. This is clearly the mechanism. The Japanese, they don't need it. That's the point. But I was always quite vocal to say that, as we know, and if you have been reading the last article on the time of Malta, that Japan is a strong ally of US for several reasons, military because of geopolitics, but also Japan was also financing the huge debt of US for many years, but things are changing here.
So, Mark, around last year, we discussed the impact of the change in the carry trade that had happened when rates changed in Japan.
Yes.
How are current policy changes impacting financial
I
markets?
mean, if you remember last year when we made this video that suddenly the world realizing that the Bank of Japan was hiking, which was creating a moment of panic, especially in August. I think Japan has been continuing to hike, and that's an issue. Why? Because now the Japanese, the domestic investor in Japan, they maybe don't need to have the US asset. because the curve is offering quite a decent yield. I'm saying decent yield between 1.3 compared to, I would say, up to 5 in US. But nevertheless, Japanese investor for the past 3 decades have been facing zero. So 1.3, it's an attractive thing. Especially we talk about the carry trade, which is like it was a very popular trade to invest in US and use coming the financing in yen. And the things that's another potential paradigm shift that maybe this carry trade is not anymore in place and it will not anymore in place because if the rate in Japan will continue to go up and the rate in US will go down, make no sense to have a carry trade. So that's an interesting thing. And even that, the Bank of Japan was very cautious. Lot of people said I've been too much cautious because the inflation level in China, in Japan was quite high. So they need to combat. I think it's one of the highest on the developed world at 3.7. When us, you remember, a lot of central banks are targeting 2% as an inflation target. So clearly here, it could be an issue because no one want to do any more carry trade and make no sense to buy U.S. asset. That's clearly the point. So here, if one of your main source of financing is not anymore present, I'm talking about for the American, from an American perspective, this is an issue. Who will finance it? And recently, we see also on the auctions, the Japan has an issue because they issue a bond at 40 years, and just only 40% people took these auctions and took this bond. There is also, as we know, a major demographic issue in Japan because people are aging, really becoming very old, and they don't have any appetite anymore for 40, 30 years. No, they want maybe something on the 10 years. So there is also a paradigm shift who's been pushing by the demographic in Japan. So clearly all these things, it's creating quite a lot of uncertainty. How's the trajectory of the US debt? We have already a lot of uncertainty on the tariff. So it's adding, adding, and adding. So it's a problem because there is some crack here, and I think we need to be very cautious to monitor closely the euro dollar trajectory, but also the yen dollar trajectory, which can give us an interesting indications where we are heading to, because at the end of the day, US need to finance its debt. There is no options. And if there is no buyer of the debt, that could be clearly a problem.
So follow up, Mark, because I think most of our viewers will want to listen to this specifically. If I have $1 million in the US markets, what should I be worrying about?
You should be worrying about the dollar. You should probably diversify your currency, and clearly you should diversify your asset. And that's what the endowment, the pension fund in US, but not only in US, I presume in Canada, etc. I'm saying, okay, we not have any more this home bias, and we are looking for interesting things in Europe at the moment. Europe was out of favors for decades. Now it's becoming in the favors. Now, the problem here also, do we really believe that industrializations in Europe is capable? Because I think the ultimate objective of the Trump administration is to repatriate the know-how, and I think it's an interesting thing because we have been surprised in 2020 when COVID came out on the impact on the supply chain. And this is clearly you want to gain control on the supply chain here. And you don't want your product, you don't want to be dependent of one country or another country. So it's another paradigm shift because if you have a little bit some economic background, Ricardo was always the guys who say each country should specialize on a product and we should exchange. So here again, it's like you centralize everything, you centralize back to US, and this is a completely paradigm shift. Did they have the capacity to assemble? And we know that the tensions between Apple and the Trump administrations. Clearly, Tim Cook was really in the front line, especially with the Trump administrations, because he said, you are moving from China to India, but you should produce the iPhone in US. So clearly here, is it realistic? Probably not. But clearly, Trump administration is pushing in these directions, putting people at the tables to try to really get control on the supply chain, and that's for sure. And I think now his new fight, it's against the big pharma. He said the medicines and drugs are too expensive in US, 4 or 5 times than the rest of the world. So clearly here is pushing in this direction. So I think, again, a message to our audience: be very cautious on the sector side also, and it's quite important. Some some sector used to be protecting the investors, like the big pharma, who are a little bit outside of the, I will say, business cycles, have been really been hit hard. So again, I think the message here, we are living in a very complex world, and it's important to keep in mind, you need to to have the professional people behind you to help you to navigate this, because the signal are not so clear. There is a lot of noise, and more noise than usual.
Great, great. Well, as usual, thank you very much, Mark,
Sure.
and thank you everyone for joining us. Make sure to check out our newsletter. The link is below. We have a brand new landing page. I hope you like it. If you don't, please let us know what you'd like instead. We have our LinkedIn page as usual, and our website if you'd like to find out anything about Merill. And what can I say? I hope to see you in the next video, where we talk about something else going on in financial markets. Like and subscribe, and thank you very much.
Thank you for your time. Thank you. Bye.